Hello everybody, this is the top-down analysis of the Forex market for the month of June. Let's just get a quick reminder of the big trends, like the big currency shifts. These are the strongest currencies. So Australian dollar, New Zealand dollar, they're still strong with the Canadian dollar and the Swiss. So those still remain strong. Now on the bottom, the weakest four currencies, we've got the Japanese yen. Well, the Japanese yen lost a lot of value over the last couple of weeks, even months. What is surprising in this lower list is that the US dollar has shown a lot of strength, even against those that should come out as very strong currencies over the years to come. Now let's have a look here at the dollar, at the euro dollar, the biggest currency pair there is in the Forex market. So we see here in the monthly chart, well, we see this run down, right? So going down means that the dollar gains strength, value against the euro, and we clearly see that it's finding, that it's bouncing off a major support. Now this is now a deciding moment. Basically, we saw this strong sell-off. I mean, this was triggered as well by the geopolitical conflict. Russia, Ukraine, right? And we have dropped down and we found support. Now this is a multi-support level. And the question now is currently, well, it looks like we're bouncing here a little bit. The question is, will the bears be able to break this level? Well, if they break it, a very, very important psychological number is the par level, the one with the 4 zeros. That's a very important big number. Well, that acts as a magnet basically, right? So we have two things here. We've got this resistance, so price bounces off of this resistance level, and then we've got the magnet below. So let's see which one is stronger, right? Can the resistance hold price here and we get a bounce higher, or is the magnet stronger so that that this important level gets broken through? Well, if this happens, we can actually expect a strong run lower. This is not only a magnet. Well, a magnet basically is a push to, a pull to, and push through. And what basically happens is if we get towards and through the par level, that there's a stop run move, right? So we can actually expect something like this. Let's just draw this a little bit bigger and see the bigger picture. So we're in a long stretch consolidation below this pattern, this S1 pattern. That's a long pattern. Well, if we break this, below this channel, this resistance low, well, then basically this pattern becomes obsolete. So then we don't have, for the time being, well, we don't have this bullish scenario based on this pattern, right? The bullish scenario that the dollar is going to lose a lot of value over the next 10 to 15 years. So this is very important. This would basically be a major change in big picture, right? So this is something to look out for. We might see the dollar get really strong, well, not only against the euro, but basically against all other currencies. Well, especially emerging markets that have debt, US dollar debt, merchant markets, well, they will get into trouble, right? Because if the dollar increases in value, well, the debt will increase too, and we might see some of country and as well company defaults. Starting at the weaker currencies, right, and getting basically closer and closer to the core countries and economies. So that's a very important level I'm observing here. The euro dollar, the support and resistance level down here. Now, in terms of trading, this basically opens up two alternatives. One is a snap back to moving averages, or snap back to the upper level of this range. Well, the other alternative is, well, that it breaks down and then we get a big rush lower. So this basically offers opportunities in both ways, right? Long and short trading the lower time frames. Now let's have a look here at some other currency pairs. This is the euro pound. So the euro pound as well has formed an S1 pattern. Well, this bar is the Corona panic spike bar, March 2020. That's a very important level. Well, that's a stop run level too. But this is a bullish pattern. So if this starts to trigger, well, if we get a rebreak of the green line, well, then actually this becomes the magnet level. That becomes the target. And should that be broken, well, again, here we might see a big rush meaning well, a strong euro and actually a weak pound. Well, as you might remember, the British pound is on the bottom of the weakest currencies of the table we had seen before. Now let's have a look at the yen pair. Now this is euro yen, right? This is another S1 pattern here on the weekly that has triggered right here, and we've seen a big move, right? So that's yen weakness. There were two stop run levels, so it's not a surprise, right, that we see so big green bars and upside volatility. There's more room to go towards the 150. But it's not only the euro yen. Let's have a quick look through the other yen pairs. Well, we had great trading opportunities with the yen, right? Trading yen weakness, and here, for example, is the US yen. So US is gaining strength against the weakness. It doesn't necessarily mean that the dollar is very strong, right? It means that the yen is much weaker than the dollar. And again here, well, we've got a stop run, right? That's how a stop run move looks like. This is an S1 pattern as well, momentum move, consolidation. And we're basically duplicating this momentum move here. We've just broken the consolidation high here during the last couple of months. And it doesn't look like it wants to consolidate soon. Once the stop run move is over, well, then we will get a consolidation. Let's have a look at AUD yen. Australian dollar is another of those strong currency pairs. Again, here we see weakness, right? Yen weakness, and we see prices moving away from the corona spike low. Let's have a look at CAD yen. CAD is one of those stronger currencies. Again here, right, we see a nice uptrend, yen weakness, and the bulls running through the stop run levels. Or here, New Zealand yen, a very classical, well, this time on a monthly chart, another S1 pattern. Here's the entry, and it just is doing what it should do. Currently, it's attacking this stop run level, and that we should actually see a couple of big green bulls, green bars, like a couple of bullish months to come. Now let's have a look at something different here, the Swiss franc. Now the Swissy is a strong currency too, right? Well, both have been strong, the US and the Swiss. And that's what we see here, right? It's kind of still indecisive. Let's just bring more history here. It's kind of indecisive, going sideways again here. This is an S1 pattern, short. It's a long stretch, and it's basically coming back and testing the big number, the par level from below. Par level and the 200 moving average. I'm expecting this to move lower, so this might be a great opportunity for getting short, looking for short opportunities in lower time frames. Moving that high while price is overextended, testing the flat line, the big number, the 200. So we're in a cluster level, and we should actually see new lows over the months to come. It's a similar picture here with the CAD Swiss. There was some weakness in the Swiss, so we're testing here again the flatline level, and there's more bearishness. So bullishness, like we should actually see a Swiss franc gain in value. Now this is always an interesting chart, the Australian dollar, New Zealand dollar, and well, it is in a long stretch consolidation, right? Well, we have a stronger New Zealand dollar. Well, this is in a downtrend. This is a consolidation. So normally this would mean that it's a trend following consolidation. So the likelihood is bigger that it's breaking lower. This is why this is drawn like this. However, we have stop run levels on both sides of the consolidation, right? As you can see, these higher lows, they are nicely aligned, and each of those is the stop run level. So currently we've seen a lot of we've seen the Australian dollar stronger than the Kiwi. We are reaching here now the high of this consolidation range. So let's just see if the bulls are strong enough to break it. If they can, we could actually see here another move higher. Well, if that happens, well, then the target becomes up here. Or we could actually see this develop into an S1 short, while a breakout that fails, and then we should see the New Zealand getting stronger. So it looks like this is going to get resolved soon here. the Australian dollar, New Zealand dollar, parity over many years. Now let's have a look at the last one, the pound New Zealand. So again here the Kiwi is strong, right, against the pound, and we see two bearish patterns. Well, one after another. So that's an S1 short within an S1 short. It's basically a double pressure, right, for the downside, and it takes a long time. So this was a short signal. Well, this was the first short signal. That's the next one. Now this is a rebreak. So it takes its time, right? So the longer it takes, well, the longer it remains in a sideways range, well, the more energy is put into the system. We already have double pressure. Now this is adding even more energy, right, into this pattern. And I'm actually, foreseeing here something as well going on with the Kiwi, getting Kiwi strength, or something going on with the pound, or with both, right? The pound getting weak and the Kiwi getting strong. Well, then we should see this this drop quite a bit and offer great trading opportunities too. So this was the top-down analysis. Thank you.